let's talk about something you probably have, but maybe don't think about too much: your savings account. Do you actually know how much money it's making for you? Because the answer, well, it might just shock you. It really gets to a bigger question. Is your bank playing fair, or are you quietly getting ripped off? So picture this. You've got $10,000 stashed away in a savings account at one of the big traditional banks. After an entire year, this is what you typically earn in interest: $1. I mean, that's not even enough for a cup of coffee anymore. Okay, but here's the kicker. What does your bank make off that very same $10,000? Well, by lending it out, say as part of a mortgage, they could easily pull in around $600 in interest. So after they toss you your dollar, that leaves a $599 profit for them, using your money. And that is the absolute heart of the matter. This isn't some kind of oversight or a mistake. This is how the entire system is designed to work. So let's pull back the curtain and really get into why this huge gap exists. You know, it really all boils down to one simple fact. To a bank, your savings are just cheap capital. They're basically borrowing your money for almost nothing, and then they turn around and use it to fund their own high-profit businesses like mortgages and credit cards. The whole game is set up to maximize their return, not yours. The secret sauce to all of this is a concept called the spread, or what bankers call the net interest margin. Just think of it as their profit margin. The bigger the gap between the interest they earn from borrowers and the tiny bit they pay you, the richer the bank gets. And this chart, wow, this shows you just how massive that spread really is. All the way on the left, that tiny little sliver, that's your savings rate at a measly 0.01%. Then you see the mortgage rate at 6%, and then the absolutely staggering credit card rate averaging over 21%. Your savings are funding those loans, and you're getting just the crumbs. So it's not just that you're missing out on earnings. Oh no, it gets worse. There's another invisible force at work here that is actively eating away at the value of your savings, and its name is inflation. This really puts it in perspective, doesn't it? That paper-thin slice is your interest gain, but that huge chunk being devoured, that's inflation, which was recently sitting at 2.9% in the US. So your money isn't even treading water. It's actually sinking, losing its buying power with every passing day. Okay, that was a lot of bad news. But here's the good news. There is a super simple, incredibly powerful solution that completely flips the script. It's called a high-yield savings account, or an HYSA for short. Now, before we go any further, there's one key term you gotta know: APY. That's annual percentage yield. This is the number that matters because it includes compound interest, which is when you earn interest on your interest. It's the true measure of what your money will actually make in a year. So you're probably asking, how can these accounts pay so much more? It's actually pretty simple. Most of them are online only. They don't have to pay for fancy corner branches or thousands of tellers. Their overhead costs are way lower. And because the online competition is fierce, they pass those savings directly onto you with much better rates. Now, I know the next question is, wait, is my money safe in some online bank I've never heard of? And the answer is a huge, resounding yes. They have the exact same type of government-backed insurance as the big guys. And this isn't just a US thing. Whether you're in America with FDIC insurance, India with DICGC, or in Europe with their national schemes, your money's protected up to a pretty big amount. So when it comes to safety, there is literally no difference. All right, let's do it. Time for the main event. Let's put these two account types head-to-head, side by side, so you can see for yourself just how different they are. Let's just break this down. First up, the big one, APY. A traditional account gets you, maybe 0.5% if you're lucky? An HYSA, we're talking 4 to 5%. That's 100 times more. Then you have monthly fees, which are common with traditional banks, but HYSAs usually have none. Same deal with minimum balances. The only real difference is you're swapping a physical branch for a slick app. And safety? As we said, identical. Let's put some real dollars to this to make it sink in. If you put $5,000 in a traditional account, you might make $20 in a year, maybe. That same $5,000 in a good high SSA, that'll get you $250. That is 12.5 times more money for doing nothing. And look, this isn't just about earning a little extra cash for pizza next year. The choice you make here has a huge compounding effect on your financial future. This is the long game. So let's run a little experiment. Let's say you deposit $10,000 and just let it sit in a traditional account for a decade, earning a pretty generous, for them, 0.5%. After 10 years, what do you have? You'd have just over $10,500. So you made about $500 in 10 years. I mean, yeah. That's pretty underwhelming, right? Especially when you factor in inflation. Okay, now for the fun part. Let's run the exact same scenario, same $10,000, same 10 years, but this time it's in a high-yield account earning a solid 5% APY. Boom! Over $16,000. That is the magic of a good interest rate combined with the power of compounding. It's not just a little better, it's a completely different league. And that right there is the whole point. We need to stop thinking about what we could gain and start thinking about what we are actively losing by doing nothing. That nearly $6,000 difference, that's the opportunity cost. It is the real price you pay for letting your money just sleep in the wrong account. So, what can you do about this right now? The best part is, it's incredibly simple. Step 1, just Google best high-yield savings account rates. Step 2, compare a couple of them. Look for no fees and no minimums. Step 3, pick one and open it. Seriously, the whole process can take less than 10 minutes. In the end, it all boils down to this one question. You work hard for your money. Don't you think it's time your money started working hard for you instead of just for your bank's bottom line? Isn't it time to make that happen? All right, let's talk about your money. Specifically, that savings account you have. I'm willing to bet it's the laziest asset you own. But what if I told you we can put that money to work starting today? Okay, I'm gonna be blunt here. Let's ask a really direct question. If you've got money sitting in a traditional savings account, are you getting ripped off? The short answer, yeah, you probably are. And look, this is what I mean. Just look at this chart. If you put $15,000 away for 5 years, a high-yield savings account could earn you almost $4,000 more than a traditional one. I mean, that's not chump change. That's a vacation, a new laptop. That's real money just being left on the table. So let's just call it what it is. This is your bank's big ripoff. We're about to break down exactly why your savings are basically flatlining. 0.46%. Let that sink in for a second. That is the pathetic average rate a traditional bank in the US gives you on your hard-earned savings. Meanwhile, they're taking your money, lending it out for car loans and mortgages at way higher rates, and just pocketing the difference. They're giving you practically nothing. But okay, here's the good news. There is a ridiculously simple, powerful, and just plain smarter way to save. It's called a high-yield savings account, or an HYSA. So what is it? Well, an HYSA does the exact same thing as a regular savings account, but it does its job way, way better. See, these are mostly online banks, so they don't have to pay for fancy branches and all that overhead, and they pass those savings right on to you with much higher interest rates. It's that simple. Now, we get to the really fun part. Let's look at how this one simple switch can absolutely supercharge your savings. The benefits here are, well, they're pretty powerful. So why would you switch? Well, how about earning 10, maybe even 20 times more interest? How about actually beating inflation so your money doesn't lose its value every year? And you get all of that with the same government-backed safety, total flexibility for emergencies, usually with zero fees, and you get to unleash the magic of compounding interest. It's kind of a no-brainer. Let's make this super clear. On 15 grand, a traditional account might get you, what, $75 a year? Barely enough for a nice dinner out. But with an HYSA at 5%, you're looking at $750. That's a huge difference, and that happens every single year. And you know, it's not just about earning more money, it's about protecting its power. Inflation eats away at your savings. With a regular account, you're actually losing purchasing power. But a good HYSA doesn't just keep up, it actually beats inflation. That 2.1% you see, that's your real return. Your money is getting stronger, not weaker. And for anyone out there worried about safety, let's just put those fears to rest right now. These accounts are just as safe as any account at a big traditional bank. They're protected by government insurance, whether that's the FDIC in the US, the FSCS in the UK, or the DICGC in India. Your money is secure. Period. Okay, I get it. I know what some of you are probably thinking. Hold on. Earn 10 times more interest with the same safety? This sounds way too good to be true. So, what's the catch? So let's pull back the curtain and look at the fine print. To be completely honest here, there are a few potential drawbacks we need to talk about so you can make a decision that's right for you. All right, here's what you need to keep in mind. First, these rates aren't fixed. They can go up, but they can also go down. Some accounts might require a minimum balance to get the best rate, and there might be limits on how many times you can withdraw money each month. And of course, they're almost all online only. So if you really love walking into a bank branch, that's something to think about. Now, that first point is probably the biggest one. The rates are variable. When central banks, like the US Federal Reserve, change their interest rates, these HSAs almost always follow. So if rates get cut across the country, your earnings will probably go down too. It's not totally set it and forget it, you gotta stay a little aware. But even with all that said, for most people, the benefits are just overwhelming. And you wanna know the best part? You can do this right now. We're gonna walk you through how to open an account in literally 5 minutes. It is honestly this easy. Step 1, hop on a comparison site to see who's offering the best rates today. Step 2, pick the one you like best. Step 3, fill out a super quick online application. And step 4, link your old bank account and transfer the money. That's it. You're done. Your money is officially working harder for you. And hey, this isn't just a thing in the US. You can find fantastic high-yield options all over the globe, from the UK to India to Australia. No matter where you are, there's a better home for your savings out there waiting for you. So let's bring this all together, shall we? Because this is about so much more than just interest rates. This is about shifting the power back into your hands. It's about taking control of your financial future. This right here is the whole idea. It's a fundamental mindset shift. For way too long, we've just accepted that banks will profit from our money while giving us pennies in return. And HYSA completely flips that script. It puts your money to work for your goals. So here is your simple 3-step action plan to get started. First, just peek at the rates once a month to make sure you're still getting a good deal. Second, use your new HYSA to build that all-important emergency fund, 3 to 6 months of living expenses. And third, remember, for those big long-term goals, you'll want to pair your HYSA with other investments. So I'll just leave you with this final question to think about. With hundreds, maybe thousands of extra dollars in your pocket each year, what will you fund? That dream vacation? A down payment on a house, or maybe just the simple peace of mind that comes with financial security? The choice is finally yours. Thanks for tuning in.